Hey traders, checking in on the stock market today. Fairly tight range out there, not a whole lot going on aside from some volatile individual names that we'll take a look at, but there's still opportunity and I'll show you how I took advantage of it even in a tight range and it helped my bearish bias a bit. So SPY on the daily time frame, we do still have our double top at the all-time high, but our daily gauge and line in the sand is 462.04, and as long as that level holds, we are in a daily uptrend. Today was a daily inside bar, and we just got tighter and tighter as different sectors rotated around. We had the financial sector extremely weak in the morning, first thing, and QQQ was strong up at the high, led by Apple. And it's really just a few individual names that are leading the NASDAQ higher, as most names were red, but you had Apple, Amazon, and Microsoft, pretty much the three most important stocks in the stock market. They were up in green. So again, you got to be able to look under the hood a bit to see what's going on because things can be misleading. We're not equally weighted here. If Apple's up, it can offset dozens of stocks being down because of how important it is and its size of its holding in these ETFs. So for SPY, inside bar would have to break bearish 467.48 for a daily lower high to be set and further consolidation from here. And for me personally, I told you yesterday I got a bearish bias. So how do I deal with that? Well, I have to do so very carefully. So I can still take bear trades. There was a clear bear setup that I took today where we have our low of the day, high of the day, higher low as we held support. On this move, I recognized on the 2-minute time frame, this looks like a rising wedge. So a rising wedge in itself is not a high probability pattern, but when you put it with the most likely scenario on a longer term time frame being a 15-minute lower high. So essentially I saw this shaping up and I said, okay, is this a rising wedge? I then go to the 15-minute and say, well, a 15-minute lower high is the most likely scenario. So I'm going to scout a rising wedge on the 2-minute time frame for a 15-minute lower high. And I'm going to make a bearish entry based on that. And so on these bull moves, I added shorts. So on this bull break here, I added a little SPXS, and then a new high, I add a little bit of more SPXS. My stop would have been 469.19, and we then rolled over. As we roll over, I exit half of my position. I am now risk-free. I can't lose on this trade. Well, I can because I swung it. And so that's a scenario where I can put myself in a low-risk position to have some downside exposure if we do see the weakness that my gut is telling me to pay attention to. Again, the charts aren't really telling me too much, but we did start to see a couple little signs here in XLF and IWM weakness. So that was enough for me to say, okay, I'll swing a little position. If we gap up open tomorrow, I will take a loss, but it will be certainly acceptable because I sold half and my break even is above this level. That's one trade I took. Other trade I took was the XLF oversold bounce, and it was just crushed. Hourly RSI got down to the 20s first thing, and I was live streaming while this happened. The 15-minute RSI was down in the teens. The 5-minute RSI, the 15-minute RSI hit 10. The 5-minute RSI hit 8. So I scaled in. First entry was I was playing FAS, the 3 times leveraged bull. I made an initial entry at 39.70. I made a second entry at 39.60, and then I placed my stop based on the dollar risk I was willing to take on FAS stopping me out. And it would have been a day loser if I got stopped out. We then saw this bounce attempt. It was fairly weak. I exited half on this bounce just under break even because I, number one, didn't want to keep staring at it all day. And number two, there was enough of a pullback and there was enough of a red flag for me. It wasn't a V-shaped bounce. You know, if you're going to see bounce follow through, you see a V-shaped bounce there. And it was weak enough that I just said, all right, I want to take half off, cut my risk in half, put my stop under the day, and now I'm risking a half-day loser. No big deal. We got a bit of follow through. I knew we were looking for a 15-minute lower high on that follow through. I said, when we lose the 2-minute uptrend, I'll be out. I exited pretty much a non-event trade, but that's just an example of a boring trade. But could have worked well, put myself in a low risk spot, and in the end, nothing happened. So QQQ, daily time frame, all-time high 401. We got up to 399.72, and again, for the most part, it was Apple, big breakout. I've been talking about watching this tightening daily range over the past week. It broke bull. Amazon had a decent green day. And by the end of the day, not so decent. But at one point, it had a decent green day. And Microsoft hit all-time highs. So that's really where the strength came from in QQQ. But if we break the low of today, tomorrow, it's a daily lower high being set. And we then look at those lines. 3 in a row. That is skill. So we've got a daily high or low if we break 396.64. Anything above 387.53 is a daily high or low. But we're watching for the potential of that lower high to shape up. Could see continued tightening ranges. IWM, weekly consolidation underway. So here was one of the red flags 2 videos ago that I was talking about. Confirmed daily downtrend on IWM. The question now is, we know we're looking for a weekly high or low because there's a lot of space for it to form. But the question is it going to be a bull flag or not? If we see a green day tomorrow, it'll be a confirmed daily downtrend with a lack of follow through, at least initially. So that keeps the bull flag on the table. If it's a red day tomorrow, that's some bear follow through, and the bull flag will be less likely. So weekly consolidation underway for IWM. A bear break on XLF took place. We broke the low of consolidation at this point. Daily downtrend following through. We were watching for the weekly bull flag possibility here. Again, same thing. We're scouting a weekly high or low. A weekly bull flag is still possible. It's just a bit less likely now that we've broken this support. So XLF and IWM were our clear lead bears. QQQ was a clear lead bull, and it was because of Apple, Amazon, and Microsoft strength. And that is your summary of the day in just a couple sentences. But let's look a little bit more in depth. XLV, so another red flag that would have to happen would be a bear break of daily support, 131.90. So keeping an eye out for that to potentially shape up a weekly lower high. So bears still have proving to do on XLV if they're going to show us anything. Inside bar today. Biotech sector still very weak thanks to IWM weakness. And we're testing this weekly support in the 121s. Unable to get any kind of daily bounce going. Still a possible playoff of 121. But we're just going to look for a daily lower high to be the result of the next bounce. SMH has a double top at the all-time high. But again, we would have to break the low of today, 301.65. And then we would scout the higher low compared to 291.55. Very similar setup to QQQ. So QQQ lead bulls, thanks to the big 3 individual names. IWM, XLF, lead bears. XLV in the middle of the road. And SPY in the middle of the road. Although a bit to the stronger side because tech is more important than all those other sectors in the S&P 500. So individual plays that I'm keeping an eye on. You know I like oversold bounces, so that's the theme that I'm keeping an eye on. DKNG, keeping an eye out for this falling wedge. This is the hourly chart with extended hours off just for clarity. And again, these are the kinds of setups where I don't care if I miss this bounce at all. It's hard for me to stress. You know, a lot of traders fear missing a move, and I just don't have that because once you put in thousands of days and 10,000 plus hours, you know how limitless these opportunities are. As long as there's markets, there's always going to be another oversold bounce. There's always going to be another all-time high breakout. And so if this bounce happens without me, don't care at all. If it gives me a nice clear trade setup where I can get a favorable risk and reward scenario, then we'll take it. But the reason I'm interested is the weekly RSI is approaching oversold. The daily RSI is very beat up, down at 24, and we were very weak. So just keeping an eye out, and what it would look like for a trade setup is just a bottom fishing play off of a low first thing, or a big enough hourly bounce where I can then scout an hourly high or low and have a stop to play off of. Again, on this kind of play, I am not just scaling into weakness because the RSI is oversold. I have to have a level that I'm playing off of. And it's the same thing for BKKT. Didn't trade it today because I didn't see anything that I liked. Daily inside bar, lower high every single day for the last 12 days. Again, we will bounce and there will be worthwhile gains, but we're not there yet. And I'm just keeping an eye out. Can you give me a clear, low-risk setup that I like for an entry? So just every day, those are just 2 names that every day I'm just going to keep an eye on. Check in on it. Is it a setup that I like? If yes, hop in, place your stop. If not, don't. Sometimes if I'm on a winning streak and things are going well and I'm up a lot on the week, I'll be a little bit more loosey-goosey with my bounce attempts. You know, if I'm up 8 day makers on the week, I'll risk a day maker trying for an oversold bounce. The dollar, bearish reversal candle on the daily. We talked about the historical RSI levels, increasing the probabilities of some consolidation. We've got 4-hour equilibriums on the metals shaping up. Gold, no 4-hour lower high yet, but silver gave us a 4-hour lower high. So tightening 4-hour ranges. That natural gas 12-hour falling wedge is still beautiful. RIVN gave us the top. And there was a nice bear trade there where as soon as we broke the low of today, so the low of today was above the low of yesterday by 22 cents. Here's an example of a little bit of front running that you can do. So a lot of people would have their orders based off of the low of yesterday breaking, entering a short, because that means daily consolidation is underway. If the low of today is less than $1 above that level, you want to be acting on that level. So you want to be triggered into a short on a break of 154, so your short fills at 153.68 rather than getting filled after a 153.78 break, because you can see how fast we followed through there. You know, in the first 5-minute candle on both of those levels breaking, we saw a solid drop. And this just shows you bulls exiting and shorts piling in. So that's just a little bit of front running. And there are often times where I'll do that. You know, I'll try and enter just above a level, or if there's a psychological level, you know, if the low of the previous day is 35.98, and that's the level I want to stop out on, I'll put my stop sometimes at 36. And my sell will fill at the bid that's on 36. And then if 36 breaks, then the stop losses trigger. And I skip those stop losses triggering. I front run that sell. There's only sometimes I'll do that because there are other times where obviously I don't want to stop out at 36 and then we hold 35.98 and a bounce gets going. But there are times where you can gauge, okay, well, if we break this one level, we're very likely to break this next level. So you can skip the line, so to speak, a bit by acting on the sooner level. So RIVN is now going to be on watch for oversold hourly bounce. It's an hourly back burner. We got real close today. And we're watching a double bottom at 140.35, potential bottom fishing play with that level tomorrow if we open above it. But we're scouting a daily high or low with lots of space for it to form. And these EV names gave a lot of the volatility. The broader market didn't have much volatility, so you got to go finding it in individual names. And LCID had a lot of that volatility as well to the downside. And it was an interesting laggard move in the sense that RIVN, when did the weakness start there? Bears showed up at 950. LCID, what was 950? We were still strong. And then we rolled over after that to the tune of 14% to the downside. So watch peers and look for laggard opportunities. LCID was certainly an example of that. Tesla had a nice bull move today. The weekly chart looks real good on Tesla, but there's one thing we're watching here, and it's a double top with an extended hours level, 120 or 1120, and we did hit the high of today at 1120. If we see a bear day, a red day tomorrow, watch for the 4-hour inverse head and shoulders potential. And if this were to confirm, that weekly would continue shaping up very well for the bulls. What else are we watching? That's enough for now. Hope you had a good day. Don't forget to do good things. And we will see you tomorrow. I forgot to look at the cannabis space. Let's check in on that real quick. So the bears are definitely winning in the short term. The size of the pullback on most names at this point is more than the bulls would like to see because the retracement size is significant enough now where even if we go 10% tomorrow, we're just going to be scouting a daily lower high to be the result of the next bounce. Granted, news can change anything, but I personally don't trade hoping for news. So I am patiently waiting. I'm looking for an entry tomorrow. What I would love to see is a gap down open. I want to see CGC gap down into hourly oversold conditions. I will buy that gap down looking for a daily higher low. TLRY is very similar. Size of the pullback not as significant. TLRY is a daily inside bar. We held the low of yesterday. So did ACB. Just barely. CGC and Cron broke their lows of yesterday. Looks like Cron's going to have an earnings reaction to keep an eye on, but they're weaker. Cron's a real nice daily equilibrium. Depends on what the earnings reaction will be. But I'm going to be scouting, and I'll probably go into two different names. So if we gap down open, I will be scouting CGC and I'll be scouting ACB, whose daily consolidation is much more healthy. And again, the retracement size gives us that information. The retracement here on ACB is about 39-40% as opposed to 51%. So it's easier for the ACB bulls to get back to the recent high than it is for the CGC bulls to do so. There was very clear bearish entries today. First thing this morning, we headed right up to the highs of yesterday in the first 15 minutes, and we rejected. So again, put yourself in the mindset of a bear. Even if you're not a bear, if CGC runs for 15-20 minutes from the open, if we hit 1403 and we run 4% in 20 minutes, a bear is going to make a bearish entry, put their stop over the high of the previous day, maybe 1461. They will have risk of 10 to 15 cents. And what's the possible reward? $1 of downside. Tiny risk to top fish, lots of reward to the downside. So that was an easy win for the bears as far as having a clear level to play off of, rejecting, and then bears control the entirety of the day. So I'm scouting hourly oversold bounces. I'm scouting daily higher lows. I want to gap down open tomorrow in Canadian MJ. MSOS, I started to enter some positions yesterday. I entered 1/3. So again, my aggressive position, I sold all 3/3 of it, 33.60 plus. I then started to re-enter. Yesterday, I made a first entry around 30.40 or so. I did not like today's action. I did not like the weakness in Canadian MJ. I did not like the weakness in IWM. So I sold MSOS at $30 and skipped the extra 2% of downside from there. But I'm still watching for the daily higher low. And I will jump back in, but I may focus on Canadian MJ because volume is dropping off now. And that's one positive that the bulls have here is declining volume on daily consolidation. That's the only thing I can look at in these charts and say, okay, that is a positive here. But we're still looking for a daily higher low compared to 28.39, so it is still a daily uptrend. One scenario of how things could play out, again, if there is no news catalyst, if SAFE does not go through the NDAA, a daily lower high and lower low would mean zoom out because our weekly lower high is set, and then the bulls try and set up a weekly trend change in their favor. But I will be anticipating daily lower highs are the most likely result of the next time we bounce. And again, if you're looking to hedge, if I'm long MSOS and I'm not selling my core, I'm going to look for a bearish entry on a daily lower high as a hedge to offset in case that happens. So one day at a time, we're scouting a bounce in the short term. I'm aggressively scouting a bounce tomorrow, especially if Canadian MJ gaps down. I'll have to be watching what the broader market and IWM are doing closely. But once that bounce gets going and once the bulls change the hourly trend in their favor, we're going to scout daily lower highs. Now I'm done for real.
Man, these vines that kind of scream so nice.
No. I wonder how old the vine is. I guess some of them are fast, but
It's like a tiny trumpet creeper.